Hello, Oracles. Well, Netflix just released their earnings and they had a big beat. So it's exciting to see Netflix kick off tech earnings with a win. We've seen this in the past. Many times, Netflix kind of gives us the idea of what we're going to be seeing for tech earnings. Sometimes it's not always playing out that way, but historically, when we look at it on the majority, we see Netflix come out and then a lot of the tech earnings kind of follow suit afterwards. And it kind of sets the tone of the market going forward for tech earnings. So having a win coming out of Netflix right now is awesome. We will continue with some bigger tech earnings next week, and I'll get into who those are going to be in a little while. But seeing Netflix start off this way is pretty awesome. Before we get into everything, please hit that like button down below, subscribe to the channel. And again, I've been seeing a lot of you guys share these videos. Love it. Thank you so much for all of that. All right, so looking at Netflix right now, after hours up 4.87% at the time of this recording, and that pushes them up to around $721. Now, that's still down from the recent highs of $736. They sold off going into these earnings, but that'll pop them back up higher. So we'll see, chances are they're going to be pushing back up and testing that 736 number as we go forward over the next couple of days. And so looking at their specifics in financials, they beat EPS by 5.32% and they beat revenue by 0.59%. So they were looking at an EPS of 5.13 and came in at a 5.40. Revenue, they were looking at $9.77 billion and they came in at $9.82 billion. So again, these beats are very solid. And as you can see here, they beat in June, they beat in March, and they missed last December. So now looking forward to Q4 earnings, if they missed last December, what are expectations going to be? So year over year numbers may look good, but are they going to have the same problem this time around as they did last time? Again, only time will tell, but we shall see what's going forward and see if it sets the tone. Now, of course, setting the tone for earnings this time around, let's see who we have coming up next. So next week, we've got Texas Instruments and Enphase after close on Tuesday. And then the big one, which we will be following here on this channel, and I'll do a follow-up report for it, is going to be Tesla next Wednesday after close. And then before market open on Thursday, we've got UPS. I'm invested in that one, so I will follow that one myself. And then the following week, we start getting the Mag 7 really starting to roll in here. So next week is really just the tip of the iceberg with Tesla and a couple of smaller ones. The week after, we've got Amazon coming out, and then Tuesday before open, we've got PayPal, we've got SoFi, and that's a big one for me. And then after close on Tuesday, we've got Google, we've got Visa, we've got AMD, and then Wednesday after close, we've got Microsoft and Meta, we've got Coinbase, MicroStrategy, Supermicrocomputer, Robinhood, and on Thursday before open, we've got MasterCard, we've got Uber, we've got Shopify, and then after close, you've got Apple, you've got Intel, we've got Vici Properties, which I'm an investor in, we've got Square, and then that Friday, we've got oil companies rolling in, but again, that's going to be 2 weeks away, so we'll check in on that as we get closer, but next week, we start to see a few more of the tech earnings coming in, and then the following week is the big week to close out the month of October and going into the 1 week ahead of the election. So all in all, I think it's great that we're seeing Netflix coming out with some solid earnings, and it's kind of giving us a little bit of hope to say, hey, the consumer is doing well, they're going out there. Now, we do have to remember that we're pushing up on the anniversary date where Netflix was cracking down on the sharing of accounts. So we'll see how this is going to go in because they did see a lot of user growth coming out of this. But as we get past that anniversary date, we're going to really see, all right, what is the true user growth after this? Because was that user growth just because of a lot of people who were sharing are no longer sharing? So we'll see how that transpires going forward. And again, that's going to those Q4 earnings. So we'll see if maybe at that point we kind of see that little bit of a dip coming. Who knows what we're going to see at that point? But to me, I'm not an investor in Netflix myself, but again, it kind of gives us an indication as to what we can see for tech earnings. Now, again, this time around coming through with the election that's going on, which seemingly has no effect on the market right now, because again, historically, we usually see a lot of uncertainty and a sell-off in the market, especially going into a presidential election, especially one where everybody's saying that, this is the most important election we've ever been through, which happens every single election. But why are we not seeing that sell-off right now? So I'm kind of just taking a step back and taking myself out of all of this and saying, well, why aren't we seeing this? Are we going to maybe get a sell-off later? Or are we just kind of euphorically pushing through this? Because right now, some of the polls are showing that Trump is going to win, and the market seems to be maybe favoring Trump on this side of things. So I don't know. I don't get into the politics of it all, but I'm just trying to understand why the market is not behaving how it historically behaves during times like this. So again, now we do have the interest rates that are coming down. So historically, interest rates come down. As we saw in 2007, we saw the market going up for a short while afterwards before we saw the massive sell-off after that because the housing market bubble popped. So are we going to get something similar where again, credit is at an all-time high? Now, again, I invest in MasterCard, Visa, and American Express. If you guys saw the video I made last night, my top 5 favorite dividend growth stocks, those are my top 3. Those are my favorites at the number 1 spot collectively. So we are seeing them at an all-time high because consumer debt is at an all-time high. Are we going to see a pullback on those stocks? Because eventually consumers are going to run out of credit that they can possibly use. Is that going to be the wall that we hit that is going to cause us to fall down? We've got the holiday season coming up. That is obviously for a lot of retailers, the big time of year for them to bring in a lot of their revenue. So maybe right now we're kind of going through this and we'll get some indications and uncertainty going through the timeframes when we get some numbers here and there, but it might not be until we get those Q4 earnings in January where we see, oh man, we are in really rough shape right now. We're in way worse shape than we thought. Consumers don't have any money left to spend. Where are we going to get money from? And we're going to start seeing earnings starting to tip down, starting with those Q4 earnings and then going into Q1. That could be that tipping point where we start pulling down in the market. Now, for me, I'm just kind of playing out scenarios of, well, I do think that we're going to get this recession, but what is going to be that catalyst? Because every single time we get something, it's a different catalyst. We end up having a lot of the same reactions to everything, which is something I want you guys to start learning to pay attention to is we may see catalysts be different for different things that happen in the market, like the Fed cutting rates, Fed raising rates. We see earnings that come out, whatever it is. What are the reactions to that? Because historically and typically, reactions are going to be the same. So the reaction to the Fed cutting rates is, well, we're going to be seeing rates coming down for a lot of things, rates go up for other things, but the market reaction is we are going up. And sometimes those reactions are delayed, like the delayed reaction from the Fed raising rates as much as they did. We still haven't felt those final effects. Those there could be those effects that we are going to have that reaction to in a few months. So again, if we have companies that are going through a holiday season and they don't bring in the revenue, we may be at a point right now where there's a lot of smaller businesses who are like, man, if we don't have a good holiday season, we are going to go under. We already saw the most bankruptcies filed this year since 2011. That is a huge number of bankruptcies. So if we are going to be going through a holiday season where there's some companies that are just holding on saying, if we can get in the revenues we need this holiday season, we will be good to go for another year. It's kind of like the business version of living paycheck to paycheck. If they aren't going to get through this and not going to get the revenues coming in, they go bankrupt. Perhaps that is going to be that tipping point because we have consumers out there sitting on way too much credit card debt. They don't have any more credit that they can use. Therefore, they can't go and spend more money this holiday season. Therefore, those small businesses end up going under. Just saying that could be that little bit of a domino that gets tipped over this holiday season, but we won't see that happening until we get into that January, February timeframe. That is where we could see all of these cards start to fall. So just kind of playing out a scenario that's a big possibility that is playing in my mind. Now, again, I'm still buying into this market. I have some cash coming in tomorrow. I do plan on adding to my portfolio tomorrow. Should be able to get myself to finish up phase 9. I'll be moving on to phase 10 starting next week if all plays out this way it should. And phase 10 is going to be the last phase before I get to level 2. And again, for you guys who are my patrons and members, you guys get to see all of that spreadsheet live all the time. But I'm going to be putting out a video again at the end of this month. I do it at the end of every month to show you guys what my progress is on all of that. And I'll lay it all out for you at that point. If you're interested to see where I'm at, you can go back and look at September's follow-up. I posted that a couple of weeks ago. So that's all I've got for you guys today. Let me know what you think tech earnings are going to be rolling out for over the next couple of weeks. Do you think we're going to see a continued trend of this and a lot of beats going on? Or do you think we're going to see maybe some misses and we're going to see pulling back? Let me know your thoughts in the comments below. Thank you guys so much for watching. I appreciate all of your support. Have a great one.